afternoon, everyone, and welcome to Stock Market Today. It's Ali Corum and Justin Nielsen here with a breakdown of the action in today's session, where we saw some encouraging price gains, Justin. But what do we need to know about the action today?
Well, I think the big question is, can you trust it? So we'll go over, of course, the markets, but we'll also talk about some individual stocks. Oneok is one that keeps on coming on our radar in the oil and gas area. So we'll talk about that. Also, Micron, one of the few spots in tech that's looking decent. And then we'll also talk about one of the fertilizer stocks, Mosaic. Is that getting to be too much in terms of a good thing?
Yeah, well, some setups and potential profit taking areas. We'll check that out. But first, let's analyze the major indexes. So here's a look at the NASDAQ Composite, which gained 1.6% by session's close. The S&P 500 up 1.9%, the Dow up 1.8%, and the Russell 2000 up 2.6%. So we are in a rally attempt. So if you just look at the percentage gains, it seems like this was another great step in the right direction. But I think trusting it, as you said, Justin, is the key caveat there.
Yeah, it's a step, but like for the NASDAQ, for instance, we're really just back where we were a couple days ago, right? It's kind of like, okay, you erased the gains of one day, then you took them back, brought them back the next day. So it's really not that we've made progress here. And we are still below that 21-day moving average line. For the NASDAQ, at least, look, I want to get it above that hurdle. Now if a follow-through day happens, it's not that we have to wait for that necessarily. And there certainly are more setups this time around than when we saw in the January 31st follow-through day, which we were a little suspicious of because of the lack of setups. But still, if I had my preference, I would like to see the index get above that 21-day moving average line. But let's be honest, the market doesn't do what I want, and just because I want it. So you have to kind of go with what it does and not with what you wish it would do. But if you take a look at the S&P 500, that one was looking a little bit stronger because, of course, one of the areas of continued strength is in the oil and gas, the energy stocks. Financials were very strong today, but you still have the materials and industrials, a lot of the non-tech areas that the S&P 500 has more of. Those were moving, and you can see that the S&P 500 is just shy of its 21-day moving average line, but at least it kind of cleared that area of the last few days. But here we are right at that 4,400 level. So that's right where the 21-day moving average line is. I'd like to see a little bit more strength. Let's see if we can get above that. Now, the question is, it's a little bit too early for us to get the final volume figures. The way I saw it throughout the day, it looked like volume was pretty much trailing. So unless some massive volume came in at the end, which sometimes it does, we wouldn't have a follow-through day necessarily today, but we're going to keep our eyes peeled because, again, the rally is intact. There are more setups, but you have to be prepared for it to go either way because, look, we've been getting resistance here at the 21-day moving average line. So we could potentially see a turn, not necessarily to new lows, but certainly we could see a little bit more of this volatile action back and forth, and that can be really tough to play.
And for more details on market conditions every day, make sure you're reading the big picture because that's where you will get the lowdown, all the latest on our market calls, this and that factors that we are looking at each and every trading day. And you can get that on investors.com. All right, let's also take a quick look at the Dow, trying to get back above that 34,000 level. Didn't quite do it by the end of the day. We also had the Russell 2000 up a nice percentage gain, but still below its highs from earlier in February and its 50-day line. I will also take a quick look at oil. Look at this, Justin, just continuing to rock and roll. But is this now at a level where we should be concerned about a pullback? Is this sustainable?
Well, I certainly am concerned about a potential pullback, but look, you've got some headlines here that could be severely affecting supply. And look, it doesn't matter, what I think here and what the chart is necessarily saying in terms of what's normal. these are some abnormal conditions that we've got going on here. And so sometimes you can see this strength continue because you have a catalyst driving it. And again, that is the supply issue that we could be running into with the issue in Russia and Ukraine. So, this is certainly beyond what you'd normally see in a move. You would expect some mean reversion, and certainly on the short term, I think I'd be prepared for that. But that could be very short term, and it could go, go higher after maybe a little bit of a pause. So, it could also keep on going. So I know that doesn't give much, information here. Oh yeah, I could either go up, down, or sideways, basically is what I'm saying. But I think what investors have to do is they have to be prepared for all of these different scenarios.
Yes.
I would certainly say if you're not in, this is not the time to get in. It's way too extended.
Right.
If you are in, then you've got to start making those decisions. Am I a long-term investor? Not long-term necessarily, but am I doing this as a position trade, as a swing trade? I've been taking most of my profits a little bit quicker lately, and I continue to do so. Oil, maybe based on how fast it's come up, you could give it more cushion. You could give it a little bit more room to pull back. But again, you have to be prepared for a lot of different scenarios.
Yes. Let's also take a quick look at the 10-year Treasury yield. So coming back up today pretty strongly after recent declines in earlier in the week. And we also want to take a look at proxy. Well,
before we go, before we go there, let's just stop on the 10-year Treasury real quick.
I'm just trying to get you to the podcast, Justin. I'm trying to get you to the podcast.
But you know what? Your best laid plans here, Allie. So the 10-year Treasury, I mean, it's worth noting that Powell did have his comments today. And,
yes,
that was important that, he was basically saying in the Q&A that his preference would be for a quarter-point hike, given the uncertainty of what's going on with Russia and Ukraine. That's generally, the Fed doesn't really tend to want to move rates and do tightening when there's war going on, but they do have this inflation that they're dealing with, and they're already feeling a little bit behind the curveball on that one. So some action is probably necessary, but rather than what was looking like 50 basis points just a few weeks ago, that quarter point, the Fed futures is basically saying, hey, that's what we think is going to happen. So, but they're going to be very fluid. Powell kept on making that known that they're going to be nimble. They've got this, they've got these supply constraints that, were from the pandemic, some potential supply constraints going on because of the Ukraine situation. On the other end, they've got the wage growth that was happening, so there's a lot of factors that they have to really thread the needle on. So not an easy thing, but I highly recommend for people to read Jed Graham's piece on the Fed, because whenever the Fed speaks, Jed Graham has a really nice analysis of that. So make sure you check that out, because he's got a lot of great details on that.
Totally agree. Yeah, I was like, do I open that can of worms?
Yeah, we have to. When Powell speaks, it's too important. So
yes,
let's go ahead and move on. One final thing before we get to the stocks. Let's look at ARKK. And the only thing I wanted to note here is, look, for as strong as this day was, ARKK, which is kind of your higher growth, those high PE stocks. Look, this is still not performing. This was down 1% today, even though the market was up as strong as it was. So that just kind of gives you a sense of what was moving and what was driving the strength.
Well, let's take a look at one of the breakouts from today, and that is Oneok OKE, a gain of 5% in above average volume, had earnings last week, and an early entry a couple of days ago, clearing that 64.80 level. And if you wanted to go even earlier, you could have played the reversal perhaps, but this continues, Justin, to be a group that is showing breakouts and strong action, maybe a different couple of waves of those moves out, and maybe Oneok is in that next wave.
Right. And so, it's also important that you realize that it's we kind of started with the US explorers and producers, the international explorers and producers, and then we kind of branched out into, your drillers, your transport pipeline, which is where Oneok is. So it's important to kind of keep in mind that some of this can go into the other groups and not just be stuck in one. But it's also important to realize, hey, when you're looking at something in the oil and gas, Is it oil or is it gas? So for Oneok, this is largely in the natural gas liquids, so the NGL, the transport and everything like that. So just kind of understand what you're dealing with. You know, you showed the oil stock, that's USO and the spot price of oil, but natural gas can act a little bit differently. I mean, they're both doing very, very strong right now. So just kind of know, before you buy, what is this play? Is this more oil or is it more gas?
And Micron is a standout in the tech sector. It was added to leaderboard today, looking like a nice setup day here, potentially with a gain of about 8% and above average volume. Earnings aren't until another month from now, and a pretty good looking weekly chart with a couple of tight closes as it approaches a cup with handle buy point.
And you've got that relative strength line that is near new highs, at least recent highs. We'll go ahead and discount what happened all the way back in 2020, where the relative strength line was at even higher levels. But certainly in the last 52 weeks, this is the relative strength line at its highest level, which is pretty impressive for a tech stock, right? So this is in the computer data storage area. What we were looking at for leaderboard is breaking the downtrend of that handle. So we already have profit on this. I think it was up about 6% when we put it on leaderboard. And yeah, it was around 92.02, if I remember correctly. And so we've already got some profit on this. And look, the other thing to note here is, again, a lot of these richly valued companies are still having trouble, but Micron, look at that PE ratio. It's a 12, so that's almost half of what the S&P 500 is. And so that could be something that is factoring into this one looking a little bit stronger. You might also have some of those, metaverse things still in play. There are a couple of the chip stocks that are looking interesting, in terms of like AOSL is one that keeps on coming up, Rambus. They are out there that look very different from these destroyed tech names. So again, it's all about looking at where that relative strength is. Not necessarily that you're going to be playing these right now, but you could certainly have them on your watch list.
And one could imagine if Micron follows up on this strong action tomorrow, it could see that RS line blue dot potentially. Okay, Justin, let's get some quick thoughts on Mosaic Fertilizers. This chemicals agriculture group has been a hot one lately, but is Mosaic ready for a rest here?
I mean, it certainly looks like it. This is a pretty dramatic move. So one thing I just wanted to let people know, look, if you're seeing some strong moves in your stocks and you're saying, oh, gosh, I went up 20% in 3 weeks, I have to hold for 8 weeks. I just want to be very clear on the rule. That rule is to be used when you're in an uptrend for the market and you're talking about first stage bases or, at least early stage. So I don't think the 8-week rule applies in most situations here. So when you're seeing some of the strength, it's okay for you to be taking profits into that strength and not feel like you're breaking a rule. So with Mosaic here, look, we cleared that 20%, 25% green shaded area. So this is an area where you could be considering taking profits. Now, that doesn't mean you have to take everything. You could take a portion, but we certainly are seeing this kind of break above an uptrend line. So if you just kind of draw a line right there, you can see that it's going in a larger way. It's kind of going a little bit more parabolic. And when you see that, again, you would expect some mean reversion, meaning that it's going to come back down, pull back. It doesn't necessarily mean it's going to stay there. Again, you have news that's driving this. The miners here, potash supply could be getting disrupted because of the Ukraine situation. So that's a factor here, but you got to be prepared for a potential pullback because this is getting a little overdone. And you could just look at a group mate here, LXU, which is LSB Industries. LXU is the ticker symbol. You can kind of see that this one is also kind of getting up there. It reversed today. And if you just look at the level it is above the 10-day moving average line, 20%, once it gets above 20%, that starts getting into the danger zone. And this one is 24% at the close. It was even higher earlier in the day. So just be careful. Certainly, let me give that warning again. This is not the time to be buying these stocks, but I think you could consider taking some profits. But you don't have to take everything. You could still keep a portion and let it ride.
All right. Thank you so much, Justin. Who's the podcast guest? What can we expect from the podcast coming out tomorrow?
You know what? We're going to have Pedro Palandrani back on the show. He is from Global X ETFs. And, last time we were talking infrastructure, we just had the State of the Union last night. So we'll probably get a little bit of an update from him on the infrastructure, but also what areas may be affected by the Ukraine situation. Some of the climate control ETFs. There's a lot of thematic things that Global X has to offer. And so it's always good to hear from a research analyst that's done a lot of the digging into the companies and the overall trends to kind of get a sense of what's happening out there. So looking forward to talking to him.
Yes, dropping tomorrow, investors.com/podcast. Thanks so much, Justin. And thanks everyone for watching. We'll see you right back here tomorrow.